Hi, welcome to the Chartwell's K-12 Stat 101 tutorial, or also known as Source 65 documents. Today, we're going to be covering why do we submit a stat form. So first of all, a stat is an account on the P&L that affects client position. They begin with the number 7 and only relate to statistical information. After a unit closes their last week of the period in My Finance, there may be instances when a stat needs to be updated. For most fees clients, non-FCPM, management fees and admin fees are directly impacted by the number of meal counts recorded for a period, to give the client the most accurate client position that we can by month end. So what is the process of submitting a stat form? Well, first, the unit pulls their P&L from My Results on day 2 of close. Also, please be sure to refer to the period close calendar sent by your accountant each period. Second, the unit decides whether stats have to be updated and enters new information into a clean stat form. Third, on day 2 and 3 of close, the unit can submit directly to their accountant. On day 4, all stat forms have to be submitted by the DM. Due to timing issues, if you do not close your last week of the period by day 1 of close, and you must do both of these by 6:30 p.m. Eastern Standard Time, the P&L that you pull on day 2 in My Results may not be correct, so be sure to follow that step very closely. Fourth, accounting submits the stat form for correction into SAP. Fifthly, the day after submitting the stat form, the unit should go back to My Results and review their P&L to ensure the accuracy of the correction. Accounting does not review all stat forms submitted for accuracy, so make sure that you do that yourself. Sixth, any correction should be submitted back to accounting prior to day 4 at 5 o'clock p.m. Eastern Standard Time on a clean stat form with corrections only.
Let's take a look at the stat form. There are 4 sections of the stat form: the header, the yellow section, the blue section, the green section. We're going to take a look at each section separately. The header. In this section, you need to enter your location name, operation number, and indicate if it's in month-to-date or year-to-date change. And then you need to enter the period that you're working on, and this will auto-populate the month and date and the date prepared. It is very important that this information is accurate. Please be sure to take a few extra seconds to ensure its correctness. Mistakes can result in information being keyed to the wrong unit or wrong period.
The first section at the top of the stat form is the yellow section, and this is for meal counts only. When you pull your My Results P&L, you'll enter either the month-to-date number that you see on the P&L or the year-to-date number that you see on the P&L into this column that says amount as shown on SAP P&L. Whatever the amount should be that you would like to see on the P&L, you will enter that on the correct amount column. The adjustment amount column has the formulas needed, so this will be corrected in SAP. The next section, or blue section in the middle of your stat form, is for client revenue. These should be whole dollar amounts up to the second decimal place. Again, from the P&L, you'll enter the amount as shown on the P&L into the first column that says SAP P&L, and enter what the amount should be in the correct amount column. The adjustment amount column has the formulas needed so that we can adjust them in SAP and are not to be touched. The last line item that reads client sales tax would normally be negative dollar amounts. So both columns D and E for amount as shown on SAP P&L and the correct amount should be a negative amount. If you have questions on this, please reach out to your accountant. The final section, or green section of your stat form, is for client costs. Again, these should be whole dollar amounts up to the second decimal place. From your P&L that you've pulled in My Results, you'll enter the amount as shown on SAP P&L for either month to date or year to date. And finally, the correct amount for what it should be showing. If you need to calculate client inventory usage, you'll first look at Tile 1 weekly expenses. You'll see that client food, client paper, and client supplies is in Tile 1. Client inventory should be counted weekly. If you cannot count weekly, and it should be counted on the last day of the month. Your ending inventory for the week will become the beginning inventory for the next week. This section is grayed out where it says beginning inventory for that reason. If you count monthly, your ending inventory for the month will become your beginning inventory for the next month. The amounts that are reflected in the above stats are nothing more than the usage of client inventory, which is calculated as beginning inventory minus your ending inventory. If beginning inventory is more than ending inventory, your usage will be positive. Your beginning inventory is less than ending inventory, then your usage will be negative. For units that will be on deferral for the summer, it is imperative that your ending inventory is still entered each week and for the period. This means that for deferred units, your ending inventory will be your beginning inventory to calculate a zero usage while on deferral. If your ending inventory is not correct when you go in deferral, your beginning inventory will not be correct when you start billing the client again. If you have any questions about the purchases column that you see in Tile 1, please reach out to your field accountant.
Client-owned commodities are also entered in Tile 1 weekly expenses. You'll see a section for commodities. You'll see the beginning inventory, market value received, and ending inventory. And this will appear in your P&L in GL account 700-400. Like inventory, commodities should be counted weekly. If you cannot count weekly, it should be counted on the last day of the month. Your ending inventory for the week will become the beginning inventory for the next week. If you count monthly, your ending inventory for the month will become your beginning inventory for the next month. The amounts that are reflected on the above stats are nothing more than your usage of client inventory for commodities, which means beginning inventory plus market value received minus ending inventory, which is your usage. If your beginning inventory plus market value received is more than your ending inventory, your usage will be a positive number. If your beginning inventory plus market value received is less than your ending inventory, your usage will be a negative number. For units that will be on deferral for the summer, it is imperative that your ending inventory is still entered each period. This means for deferred units, your ending inventory will be your beginning inventory to calculate a zero usage while on deferral. If your ending inventory is not correct, when you go into deferral, your beginning inventory will not be correct when you start billing the client again. Here we added a reference guide that will help you map the GL accounts that are on the yellow section with the blue sections of the stat form.
Finally, there is a second part of the reference guide for your reference. This concludes our Stats 101 seminar, and please feel free to reach out to your accountant if you have any questions at all. Thank you. Have a wonderful day.